presentation of TFNN. The Tom O'Brien Show is produced every business day. Tom takes your phone calls toll free at 1-877-927-6648. Internationally at 727-873-7618.
Hey, Robert, how you doing, man?
Yes, good, and thank you for taking my call. I wanted to let you know that I've been a subscriber for a couple of years, just different members of your team, and I really enjoy it. But really the reason I'm calling is to express my sincerest gratitude for you providing that information yesterday on the small business grant. I'm a small business owner and primary breadwinner for my family, and if I can get that money, it's going to really mean a lot to my family. So
that's awesome.
Thank you for taking the time to do that.
No, well, listen, man, we appreciate you growling and prowling with us.
Now, Tom O'Brien.
What's going on, everybody? This is Jacob Shoup. You're watching the Tom O'Brien Show. I hope you all had a fantastic weekend. A lot of news over the weekend, a lot of confusion on the news, and uncertainty prevails. Of course, some of the biggest news that we had was that the semiconductors, tech, all these kind of guys were going to be spared from the tariffs, right? Referring to the massive 145% tariff slapped on them. Trump then said, there was like news swirling around that there's 30%, and Trump clarifies that no one's exempt from tariffs, we're just moving them into a different bucket. And you know, in reality, that 145% level was unsustainable. It is effectively like an embargo on China. And so, you know, the idea that that persists is probably, you know, not the best way to kind of look at the whole thing. Still, I don't think that the market priced down to 145% tariffs. So, you know, is this bump up meaningful? There's still a 20%, I suppose, what he's calling a fentanyl tariff on it, which is interesting, and it's unclear whether or not that will be on top of, you know, whatever the national security tariff will be. You have some news today that NVIDIA is going to start building factories in the U.S. to deploy chips. This is cool. You have some news with Intel as well, trying to sell off some of their non-core assets to get some cash, which on the long term, it seems like it, you know, might get kind of interesting for Intel. You know, 4.48% today, 2062. Of course, they're under new leadership, so we can see what happens with them. But definitely one that I'm watching. SPY trading up 1.52%. You know, not just not a whole lot of action today. Of course, you had a major sell-off from the run-up in futures at a low about 533.86. That was where most of the volume persisted throughout the day. Trading now is 542, up 1.51%. If you look at this on a big scale, of course, we still have an hour left. You can get a lot of fun stuff at the end of the day, but very, very low volume in this, right? So we'll see what happens. Of course, you're having a massive kind of bounce right now, beating some of the gap here, which is interesting. You know, if this persists, you can close that gap about 554. You have the composite trading up 1.35% at 16,951. Dow Jones Industrial trading up 1.25% at 40,719. With that dollar still relatively low. And what I'll say with that is the slide. So, I mean, you know, I've been following with the 10-year as well, right? Yields are still somewhat elevated, right? Definitely considering off that 3.8% we saw last week. We are coming down. We were stabilizing for most of the day about 4.05 to 4.07%. You're now trading at 4.37, right? This might be a little bit of that unwind kind of improving. Of course, what we were talking about last week is, you know, how much of this was, you know, people unwinding their trades, and then how much is some kind of fear of sovereign risk in the U.S. And I'm assuming we're going to find that out pretty quickly. You have high yield corporate bonds moving up today as well. You can kind of see an HYG. That's had some nice, let's see what we're at right now. We got 0.68%. You know, I still think that the tariffs, the impact of these tariffs, even though they're lower, right? And I mean, there's a lot of shock factor to the way they impose the tariffs, right? To derive reciprocal tariffs. You know, they're still relatively high, right? I mean, especially if you're talking like tech or anything that comes from China or Canada, I'm assuming, in Mexico, if they get the 20%, you know, fentanyl tariff. But it does seem that people are maybe getting a little bit more optimistic on it. What I was looking at today is a lot of the things that are rallying. I always try to check like these kind of weird meme stocks, right? IonQ is off 2.26% today, right? Rigetti, of course. These are like the retail memes. That's off 1.04%, right? Even Tesla itself, right? That's up 0.37, but that's been flipping a little bit. It was red a little bit earlier. And so what I'm saying with all this kind of stuff, I'm just curious what Hood is right now, up 1.49%. It seems like, you know, the insane optimism that we were seeing as we were starting to come down, right? Where you'd see face-ripping rallies in things like these kind of meme stops, like IonQ, like Rigetti, like Tesla to some certain extent, are not happening right now, right? And that makes me think, like, you know, are we seeing kind of, you know, an absence of retail in this? Are we seeing some larger guys kind of buy up some of these better equities? You know, I don't know. Ones I'm looking at right now, and I am going to add Kamiko Corporation for the long term. That's up 1.74%. UUUU, Energy Fuels. These guys are working on a neodymium supply chain. Really looking forward to that, up 3.88% today. And then, of course, your neodymium rare earth miners, MP Materials, trading up 23.15%. And that's not even the craziest one. This is USAR, USA Rare Earth, up 59.81%. We'll talk some more. Let's go over right now to TFNN.com. Want to take a look at the newsletters tab. Of course, this has been an extraordinarily uncertain, volatile time. And I've been reading the newsletters every morning just to kind of get a bead on what our traders are doing. And it's been very helpful, I would say. Today is Monday, of course. We're joined by Steve Rhodes. Steve is the author of the Mastering Probability newsletter. Definitely recommend checking it out. If you haven't yet, we have a 30-day money-back guarantee. For whatever reason it doesn't work out, you can get your money back. We're betting that it will. Steve, how are you doing? Are you with us?
I'm doing great, Jacob. Yourself today?
Doing well. Quite interesting. I think I hear some echo. Let's see here.
Uh-oh.
There we go. I think that's good.
Okay, cool. You don't want to hear my voice echo. You can only hear my voice once. If you hear it twice, that's a problem.
No, you're good to go.
Oh, good. So, you know, and look at the markets. I've got one of my main screens up right now. And when I just take a look at this towards the end of the day, you know, where do my eyes gravitate to? And one of the places that they gravitate to is the spot VIX. And the reason that it gravitates to spot VIX is if we take a look at the upper left-hand panel about midway through, my cursor is on it right now, what we'll see is that we've had a one-day rate of change of minus 20% out there. Yeah. Now, the VIX has got some very cool tools that can help us to analyze what the market is communicating to us. And that's really what this is all about. We're trying to understand, has the market bottomed? Is this a counter trend move? Does it matter if it's light volume on the way up? You know, all those types of things. But we also have to factor in the mere fact that we're in a holiday week.
Yes.
So you got schools closed, people vacation. I can tell you down here it's just jam-packed. You know, so it's also a lightened type week out there. But if I just do this before we go to a break, I'll put this up on my chart, and then we'll come back and take a look at the VIX. This is the S&P 500. We're coming into Easter week. The cool thing about this tool is that I can go back 97 years and take a look at how the S&P is traded coming into Easter. This red line is where we're at today. You can see where the S&P typically rallies as you come into the Good Friday Easter weekend. But we'll take a look at the VIX when we come back.
Steve, please stay there, folks. We'll be right back with Steve Rhodes after the break.
If you spend any time online researching trading techniques on how to begin your trading journey, you've no doubt come across many folks who push Forex trading as a way to make big money quickly. Unfortunately, there are equally as many stories of these so-called Forex professionals just looking to make a quick buck off aspiring traders without actually teaching the ins and outs of the Forex market. This is what sets Teddy Keckstack's The Tiger Forex Report off the riffraff. Every Monday, former Chicago Mercantile Exchange member and author Teddy Keckstack releases his Tiger Forex Report newsletter, where he dives into the complex world of Forex and takes time to actually teach you his methods that have made him so successful in the fast-paced and rewarding world of Forex trading. Furthermore, all subscribers receive access to archived live streams of Teddy's, where he provides university-level education to help you in Forex trading. All first-time subscribers receive a 30-day money-back guarantee. So what are you waiting for? Forex awaits.
The reality is that navigating financial markets can be risky.
Markets can be chaotic and difficult to understand. Having the latest market advice can help you turn this chaos into a key for creating winning trades. At TFNN, we understand that it can be hard to find reliable market news. That's why each of our market experts offers their very own market newsletter. A must-have tool for every trader out there striving to find an edge in today's markets. TFNN newsletters cover every aspect of the markets so you can analyze the market before you trade. Try any of our great newsletters risk-free with our 30-day money-back guarantee. Just visit the Newsletters tab on the front page of TFNN.com. TFNN. Educating investors.
Are you ready to take charge of your financial future? TFNN is your gateway to the world of trading and investing. Whether you're starting out or scaling up, TFNN empowers traders and investors of all skill levels with top-notch investing systems, strategies, and techniques. It's time to protect and grow your money with insight you can trust. Join us live Monday through Friday during market hours for exclusive content that moves with the markets. At TFNN, we bring the trading floor to you. Our seasoned hosts are here to answer your calls and questions live on the air. Check out the Tiger's Den for just $1 and follow us on YouTube and become part of our vibrant community. And remember, at TFNN, we're so confident in the value we provide that we offer a 30-day money-back guarantee on all new premium newsletter subscriptions and services. You have absolutely nothing to risk, so why wait? Tune in live to Tiger TV and transform your trading journey, because when you know better, you invest better. Join us and experience the difference today. TFNN, educating investors.
Welcome back, everybody. So Jacob Shoup, you're watching the Tom O'Brien Show. We are joined right now by Steve Rhodes of the Mastering Probability newsletter. Before we went to the break, Steve was about to enlighten us on what's going on with the VIX and what that might mean for this week. Of course, the VIX right now is trading at 30.18. I think the average you usually have, Steve, is right around like 15.20 on the long term. Of course, you had massive rip-ups in the VIX, hitting 60 over the last week. It's been quite volatile. What are you seeing right now with the VIX? Oh, okay. My apologies. I think Steve is fixing on the microphone here. Let's take a look while we get him back in. Take a look at MP right now. Fletch is saying already has the volume today. Take out the weekly swing. Yeah, I mean, this is strong. Let's go. We're going to talk a little bit about the rare earth. This is a meaningful movement up, right? And I got to give credit to Fletch. He's the guy who brought this up in the den. And again, if you're not in the den, really recommend checking it out. You can do that on the front page of TFNN.com. But this is some serious movement, right? And what is this all behind? Of course, China is, I think they're not sending rare earth to a lot of people, right? It's not just the US. And this is a really big leverage kind of point that China has, right? Yeah, okay, so let's see here. Yeah, I mean, it seems like they've just stopped exporting just straight up, right? Tech, autos, aerospace, defense. One of the big things that I believe Trump wants to do, if he can get, his vision passed, which is kind of bring back industry, a lot of that, to be honest, is going to be automated. You can't really do that in a meaningful way and be like a global exporter in kind of the way he wants to be. If you're going to deal with human workers that are in unions in the US, a lot of this is going to be automated, right? And the way that a lot of these robots operate is they use, obviously, articulating R's, but they have neodymium magnets in it, right? That's what that mineral is neodymium. MP Materials has this built out in a major way. Taking a look at USAR real quick. This is a really interesting equity. I almost bought puts on it today after seeing it rally, but it really is quite expensive. Because I took a look at its balance sheet. And I'm going to pull it up for you right now because we're going to take a look at how strange this company is. And this is what you kind of call like a hype run-up, right? Let's see here. Because I had not really, this didn't even pop up like on my radar even slightly, right? Let's see here, take a look at. Okay. this is like the weird spot we're in, right? This is a very speculative kind of play with it. You have current assets, and I thought I'm like missing something. It's got to be in the thousands or something along these lines. It's not. I mean, this company straight up has $2,100 in cash. They have $24 million total assets. There must have been, I didn't take too deep of a look, but I mean, there must have been some kind of major acquisition last year that saw, in 2023, that kind of saw this, just massive erosion in cash. Liabilities, pretty dang near. Does it seem like they have, you have convertible notes, okay, that's one thing to keep in mind. Nothing like insane debt-wise from what I'm seeing with it. You have a decent net loss on these guys. So you have a net income of $7.9 million, net cash used in operating activities, $1.4 million. I mean, this isn't like super bad, right? But I don't see the massive build out just yet. So if you're seeing stuff like this, right, where you get a massive run up in 55%, it's always important to kind of take a look at what's going on. But meaningful move, if they have that kind of exposure to things like neodymium, like rare earth, and you're going to see China start using their, they do like 90% production of rare earth in the world, right? And it's not like we don't have it in the US or other places in the world. It's just you're not built out for kind of harvesting that stuff out of the ground and then processing it, right? So this is very interesting. I will follow it a little bit closer. I think this had a big pump and dump. Oh man, what? It was in March. Yeah, up to 20 and then just a complete cratering down right there at 556. Interesting, be careful with that one. Another one as well that I'm looking at in the same realm is ARRNF. This is American rare earths. That's up 8.8%, not a ton of exposure, right? They have a 100% ownership of this mine, which is the Halleck Creek. They are big, they do scandium, which is, research really, but they have exposure with neodymium. We're gonna talk a little bit more about them. I think we have Steve Rhodes back on. Steve, how are you doing?
I'm good. Back, sorry about that, but hopefully we got the audio piece of this thing.
I think it sounds great. Let's take a look at that VIX.
Yeah, so you were I could hear you. You couldn't hear me, and so there's a number of different things really to discuss about the VIX. So what I have up on my screen, you were talking about how the VIX last week was up in the 60 area, 50, 60 area, or what have you. What's really important, if we take a look here, so if you look at I'm in the upper section of my chart, and it lists out each of the future contracts that I have for the VIX, April being the current contract that we're in. It's priced at $28.90. What you first notice here is that all of the forward future contracts are trading below that level. That sets up something that's referred to as contango. That is not a normal, natural thing for the VIX. If, for example, the VIX was worried about a longer-term event out there, we would see the May, June, July, August, September trading higher and trading above likely the current contract out there. Above that, I have the spot VIX, which is trading out at 30.03. There's also three other indices that the CBOE created. So you can take a look at a 3-month version, a 6-month version, and a 1-year version. We can see that even here, this is in contango. And so that is going to straighten itself out. If we take a look at the 3, the 6, and the 1-year charts out there, the way that we can see that something is a contango is I have a ratio that divides the VIX by the 3-month or the 6-month or the 1 year.
Right.
And when we get above the 1 level, that tells us we're in contango. And if we go back and take a look at, now, these generate typically really good bottoming signals. So while there's all this fear and everything that's out there, or people are talking about it, all I'm doing is really looking at the charts. What are they signaling to you and I? Now, at this moment in time, even though the VIX has been falling, it has a 1-day rate of change below minus 20%. We're going to get back to that. We still are in contango. And not until we get those ratios back below the 1 level, we get the VIX that is back to normal, meaning that it is trading below forward future contracts out there. At that point, then this tool here would identify that last week was a bottom, a viable bottom out there, which subscribers and I went ahead and took that long position. So that's the first thing. But now we're not in the clear until we get below that 1 level, until we get back outside of that contango. Any questions about that? Because I know it's a concept maybe hard to grasp or what have you. But it's one of the very cool tools about the spot VIX, especially in times like this.
Yeah, no, I don't have any questions, but if you do, please put them in the Tiger chat, put them on YouTube, and we'll ask Steve. But yeah, I've really been watching the VIX quite a bit right now, reading what a lot of people are saying about it. It's been an amazing learning opportunity.
Yes. Well, and so one of the other things that's cool is today, right now, VIX is trading lower by minus 17%. Any close below minus 10% on the day triggers an initiation signal, an initiation to higher price. Okay. So I just want people to understand that as we come back and we take a look at some other charts.
Yeah, Steve, please stay right there. Folks, we'll be right back with Steve Rhodes after the break.
Many trading newsletters attempt to focus on a narrow set of equities or commodities. While this works for some, it oftentimes misses many opportunities that possess huge gain potential. But how is an independent trader supposed to scan the entire market looking for these hidden opportunities? One simple answer: the opening call newsletter. Basil Chapman, developer of the Chapman Wave trading methodology, has been trading the markets for longer than most trading influencers have been alive. And over that time, he has honed his methodology in order to accurately call movements in a wide range of equities, from semiconductors to uranium to key indices and so much more. Basil is old school, taking the time to educate the trader while also giving his insights into key indices, selective stocks, and more. Opening call subscribers also receive access to dozens of educational live streams that can be accessed at any time for your edification. All first-time subscribers receive a 30-day money-back guarantee. So ignore the pop trading influencers and start learning time-tested technical analysis.
Steve Rhodes started his trading career as a student almost 20 years ago, and the student has now become the master. Steve won the prestigious Timer of the Year award in 2018 and barely missed that mark again in 2019, finishing at number 2 for the year. An amazing accomplishment. Steve Rhodes is committed to sharing his techniques and knowledge with anyone who wants to learn, and he shares his vast amount of trading knowledge every day in his Mastering Probability newsletter. Steve's award-winning newsletter, Mastering Probability, is delivered every trading day with updates throughout the afternoon. Sign up for Steve's market newsletter, Mastering Probability, and you'll receive access to 7 of Steve's educational webinars absolutely free. At TFNN, all our newsletters come with a 30-day money-back guarantee, so you have absolutely nothing to worry about. Visit TFNN.com and try Mastering Probability 30 days risk-free today. TFNN, educating investors.
This year has already been a wild ride for the market. We started off heavily in the red, traversed back to all-time highs, and we now have a trade war looming. Trying to play this chop as an individual trader leads to death by 1,000 cuts. Where does this market go next? Should I add to this position or cut my losses? Where is the next opportunity? Tariffs, trade wars, analysis paralysis. Don't become a victim of this intense market. Instead, join Larry Pesavento over the 2nd and 4th Friday of every month for 3 hours of live trading. Larry has been through many markets just like this one, and the insight he provides is invaluable. The dates for this month are April 11th and 25th, 9 a.m. to noon Eastern Time. Get in here and let's start trading. TFNN, educating investors.
This portion of the Tom O'Brien Show is brought to you by Direxion's daily leveraged and inverse ETFs. Whether you're a bull or a bear, you choose the direction. Visit Direxion.com. Investing in the funds involves significant risk and should only be utilized by investors who understand the impact of leverage and actively monitor their portfolio. They are not designed to track the underlying index or security for more than a day. Before investing, carefully consider a fund's investment objective, risk, charges, and expenses contained in the prospectus available at Direxion.com. Read carefully. Distributor Foreside Fund Services, LLC.
Welcome back, everybody. We are joined right now by Steve Rhodes of Mastering Probability newsletter. Steve, before we went to the break, taking a look at VIX. Of course, you're saying, what if it closes below that 10%? You usually get a sign of some movement up in the equities, or at least some further movement down in the VIX.
Yes, exactly.
Yeah.
It's a signal that typically, if I'll go back to the chart out here so folks can see it, it's marked by these green arrows out there, and it especially works when we're coming off of bottoms or we're near lows versus when the signal might happen up towards a high out there. So I just want folks to be aware of that. Now, what the VIX also needs to do in order for the S&P 500 to really start cruising to the upside is it must close below its 50-day exponential moving average, and that presently is at 2506. We're at 3039. If we do get that VIX start trading below the 50-day exponential moving average, that is a bullish signal out there, and just would add to the contango bottom signal that we have. We're just waiting for full confirmation of that. But we have other bottom signals that are present out here, and we can take a look at those as an example. Let me see what charts we've got up here. Those. Both for the daily and the weekly time frame. I'll get the charts up here momentarily. We're going to take a look at both the daily and weekly time frame right here. And so on the upper portion are the daily charts for the ES Mini, the NQ, the Dow, and the Russell 2000. Each of these have by the D point bottom patterns. I won't draw in the A to B equals CD. I'd rather just kind of take a look at the candlesticks out here. And it was on the trading session of April 9th that we had that nice big old bullish engulfing candle, the reversal in the market. And that set up the by the D point bottom pattern for the ES Mini. Inside the the ES Mini for its weekly time frame, it was Friday's rally that generated a bullish piercing candle. That too confirms a by the D point bottom pattern. Now, folks might notice that you can see bar number 8 on the weekly time frame chart for the ES, the NQ, and the Dow. That too can be a bottom signal, but we already have by the D point or Gartley buy patterns for the daily time frame and weekly time frame for the ES, the NQ, and the Dow. In the case of the Russell 2000, it has a by the D point bottom for its daily time frame and a Rhodes momentum indicator signal. But the weekly is a TD9 count bottom. That pattern completes this week. So the weakest of the indices giving us a daily and weekly are saying we have bottom. You had mentioned about also so in a light volume market, is there any kind of a tool that we can use that helps us to understand that, well, maybe it's okay? Right. And that tool really comes from the New York Stock Exchange, the Advanced Decline Oscillator. And that is the panel number 2 from the bottom out here. And what that does, Jacob, is that takes panel number 2 on my chart, the Advanced Decline line, and it generates the difference between the Advanced Decline line as it pertains to its 39 and 19 period exponential moving average. So we're looking at the difference. That's an oscillator. When it closes above the zero threshold level, right now it's printing at 28 and change on my screen out there, that tells us that we're back in positive territory, more bullish territory. If we close above that today, get a second close tomorrow, that tells us that buyers are the ones that are in control of the market as relates to this tool. Sure. Now, the market won't move. My historical analysis of this is when the S&P 500 really moves is when we have both the Advanced Decline Oscillator in bullish position and the spot VIX in a bullish position, meaning below the 50-day exponential moving average. So if we start doing that, we're going to see the market continue to take off. Being above the zero threshold level is very important. Of course, it's only 334. Anything can happen today. But right now, what I can share with people is we have got bottom signals across the board, daily and weekly equity future contract. We can go even deeper than that. And what I mean by that is if I go ahead and put up this set of charts, this is the ES Mini. And what I've added here is the RSP. And the RSP is the equal weighted ETF for the S&P 500. When I take a look at where the RSP, how this is trading today versus the SPY, this is telling me that it is not the heavily weighted instruments inside the S&P 500 that are moving the market higher. So it's coming from the other end of that spectrum, maybe the other 400 and some odd components out there. This is a bullish signal. Now, the trading session from back on April the 9th out there, big, huge rally. And where that rally ended was at the top of its profile, 165.37. For folks that aren't familiar with profiles help us to understand where buyers are located, where sellers are located, and within that range where both those buyers and sellers believe there's fair value. Also another critical tool here. So 165.37 is that key resistance level that if price closes above, and it's likely not going to do that today, but for the equal weighted ETF out there, boy, that'll be giving you a gigantic signal that the S&P 500 wants to continue its rally out here. The other levels of now, in the case of the SPY, if we were just looking at the SPY, we can see that price closed above on Friday at the top of its profile, and it's trading above it as well right now, 533.17. The real important message comes from the equal weighted ETF, and we can switch from the S&P 500. We can take a look at the NASDAQ and do really the same thing out here. In the NASDAQ, the ETF for the equal weighted is QQEW. That's on the very right-hand panel of my screen. Now, again, if you take a look at the Qs right next to it, price closed above profile on Friday, trade above it today. That's a bullish signal out there. But it's really going to be the equal weight. And the equal weight is getting ready to move in towards a sell zone. And a sell zone, this is where, as your pilot, I say just fasten your seatbelt. Don't get up and go to the bathroom, unless you absolutely have to. But you've got a sell zone between 117.85 and 119.78 out there. If price can get through that, meaning above 119.78, well, first it'll set up an A to B equals CD pattern to the upside in the QQEW out there. The other area of resistance for those folks that are trading the futures or watching the equity futures, the ESM or the NQ is about to hit a sell zone. That's between 19,327 and 19,685. If price closes above 19,685, it's off to the races to the upside, maybe even back to new all-time highs out there. So I'm just seeing bottom patterns all over the place, daily bottom patterns, weekly bottom patterns. I like what the equal-weighted ETFs are doing out here. They, too, formed bottom patterns. If we take a look at the Dow has an equal-weighted ETF out there with only 30 stocks. I don't put as much emphasis on this, but even today, the equal-weighted Dow, that's the right-hand panel of my screen, is back inside its profile. That's a positive thing. It's trading above its oscillator and change line. That's a positive thing. It suggests that it wants to make a move up towards the 35.43 to 35.92 area. So I know market volume is light. I know we've got a bias to the upside in the S&P 500 for just simply the Easter breakout there. At least we have over the last 97 years. I can change this from 97 years to an even shorter period, say the last quarter of a century out there. And even in the last quarter of a century, you can see that the bias is to the upside. So I believe that this rally continues as we head into the Easter break.
Fantastic. Well, Steve, thank you so much for coming on, staying through the technical difficulties. We'll see you 11 a.m. Eastern time for the Trader's Edge.
Sounds great, Jacob. You have a great day.
You too, Steve. See you tomorrow. All right. Yeah, folks, again, you can check out the Mastering Probability newsletter by Steve Rhodes. It is great. He's also on 11 a.m. Eastern time for the Trader's Edge right here on TFNN. Stay right there. We'll be right back. We got some stuff to take a look at.
If you're looking for potential trading setups in the stock market, then Rocket Equities and Options Report is a newsletter you should try. Tommy O'Brien delivers options and equity trades when the markets present them, using a combination of fundamentals and technicals. Sign up for Rocket Equities and Options Report today with a 30-day money-back guarantee, so you have nothing to risk. For all the details and to start your subscription today, visit the front page of TFNN.com. TFNN, educating investors. For traders who crave risk, Direxion's daily leveraged and inverse ETFs provide opportunities to magnify short-term perspectives with up to 3 times a daily leverage, utilize bull and bear funds for both sides of the trade, and trade through rapidly changing markets. These are highly leveraged ETFs with daily resetting designed for short-term trading, not long-term investing. Whether you're a bull or a bear, you choose the Direxion. For up-to-date pricing and performance, go to Direxion.com. Investing in the funds involves significant risk and should only be utilized by investors who understand the impact of leverage and actively monitor their portfolio. They are not designed to track the underlying index or security for more than a day. Before investing, carefully consider a fund's investment objective, risk, charges, and expenses contained in the prospectus available at Direxion.com. Read carefully. Distributor Foreside Fund Services, LLC.
The reality is that navigating financial markets can be risky. Markets can be chaotic and difficult to understand. Having the latest market advice can help you turn this chaos into a key for creating winning trades. At TFNN, we understand that it can be hard to find reliable market news. That's why each of our market experts offers their very own market newsletter, a must-have tool for every trader out there striving to find an edge in today's markets. TFNN newsletters cover every aspect of the markets so you can analyze the market before you trade. Try any of our great newsletters risk-free with our 30-day money-back guarantee. Just visit the Newsletters tab on the front page of TFNN.com. TFNN, educating investors.
TFNN has launched the Tiger's Den. Hosted at Discord, TFNN has been educating traders for more than 20 years with live programming hosted by a variety of professional traders during market hours. The Tiger's Den, available to all tigers and tigresses for just $1 for the year. There's no catch or added costs when you join our community of traders. Sign up today and become a part of this educational community of traders. Just visit the front page of TFNN.com.
This program is brought to you by Vista Gold, traded on the NYSE American and TSX under the symbol VGZ.
Tom O'Brien.
Welcome back, everybody. I was just joined by Steve Rhodes. You're having some, audio problems with it. You can check our YouTube channel, Tiger Financial News Network. We are going to have that up for you after the break. It was definitely a very good interview, some great insights in a major way from Steve. And of course, you can check him out at 11 a.m. Eastern Time right here on TFNN. Okay, let's take a look at what we got going on. First thing, there has been contraction in consumer credit, right? Some people are taking that as banks not lending out as much, but really what I think it is people are entirely strapped, right? Now, there is something that's a little bit weird with this, right, where we really have a massive adoption of buy now, pay later. To what extent does that affect, declining increase in consumer credit? I'm not sure. But what you definitely see in, recessionary periods is something like that, right, where people are just not spending as much. What I would say as well is the fact that Louis Vuitton, give me a second, we'll see this here. Yeah, LVMH had revenue below views. And what's really interesting about this, let's see here. Only 10.11 billion euros. This is Louis Vuitton and Dior, down 5%. This is really, it misses expectations in a major way. This was always an equity that did well during shorter term kind of turmoil. Remember in 2022, it was doing well because wealthier people can float all this kind of stuff, right? Even when times are a little bit tough. So, you're seeing a decline in that. I think really just underscores the amount of uncertainty that still exists in this market and really how strapped everyone is. I mean, there is a chance that you might be seeing, recession right now, right? Of course, that's something you kind of look back on and you say, okay, yeah, that was a recession, right? You're getting that kind of contracting growth. I mean, the New York Fed kind of poll came out. They're still seeing somewhat elevated inflation as well. Of course, the Fed apparently did not really have to step in with the treasuries. Let's see what the 10 years trading at right now. 4.38%, coming down a little bit. I mean, it's still a weird spot, right? I think there's just some kind of holding the breath right now. Even though the VIX is coming off in a major way, and it had been trading down for quite a lot of the day, your SPY is not, and don't get me wrong, it's at 1.46%, right? Just the volume's kind of low. I just personally feel that the uncertainty is still kind of there. You are seeing some pull off in the gold contract off 0.58%. I don't know. To me, I don't feel yes, let's get in. But if the point is if we really do start seeing some major contraction in the economy that would indicate that we're in the recession right now. Buying equities then is fantastic for a longer time hold, right? And again, the reason why I look at things like IonQ and Rigetti and Tesla to see what's going on is because you think about it, like if the larger broker dealers, any of these guys are kind of trying to get back in and establish a position, they're not going to buy these insane growth stocks, right? There, of course, things like Nvidia, Intel, and everything do have growth to them, right? But they have a little bit more substance to them than something extraordinarily, experimental, like you would see with IonQ and Rigetti. So, that could indicate that you're starting to see people start trying to take more exposure to risk, right? There's obviously some buying going on in the bonds right now as well. Is this a return to okay, maybe this is a little bit of an overreaction here. Trump seems like he's willing to make some deals with it. I don't know how this is going to turn out with China in any capacity. There is still plenty of risk of volatility, right? Of course, you get OPEX coming up this week. Might not be a ton of things going on around that. And then, of course, you have a shortened holiday week as well. I believe options expiration is on Thursday, as obviously, of course, as opposed to Friday. So, I don't know. Something about this doesn't seem entirely right to me, which, of course, that's just more instinct than anything, out of the ordinary, besides maybe just super low volume. But I'm still concerned that the volatility exists in here now. And again, remember, these are like only 90-day extensions, right? It does seem like the European Union is trying to have a conversation with Trump and sees that kind of window. What can Europe really cozy up to China in a way and kind of replace the US? I don't know, right? That has not really ever been attempted before. We of course know that China, dumps a lot of products in them, screws up European manufacturers. Europe is not always a very hasty kind of organism. And even if their intention on the long term is to divest out of the US or at least extricate themselves to some extent, do they do that immediately, right? I would kind of wager against that. Still, you're seeing some nice movement in European equities. Of course, Rheinmetall, these military companies are blowing up. I think that is something that Europe is absolutely going to try to pursue further. You have an adoption from NATO with Palantir, which is very good news for Palantir to the upside. It'll be interesting to see if they can kind of get some more, deals signed in that kind of way. Additionally, you have this looming specter of pharmaceutical tariffs, right? So Pfizer is up 1.07% today, which is kind of funny considering the obesity pill setback. It was, I think danuglipron, I think was the drug. Essentially, it was supposed to be another GLP-1-like drug, and it gave people some liver issues in a pretty serious way. So they kind of canceled that out. Additionally, if they're going to have issues producing pharmaceuticals, right? If Trump does slap a tariff on it, you can see some major volatility. In the same vein, the idea of lessening the impact on things like GM, like Tesla, can absolutely give a momentary reason to send these equities to the top, right? GM's up 4% on the suggestion that Trump might put them into a different category that would essentially defend them from this 145% tariff that exists. It's a very interesting way to do this kind of deal, but that is what's happening, right? And I wonder if there's a little bit of optimism behind it. But again, just as quickly, this stuff can kind of deteriorate entirely. Trading Tesla's up 0.76%. Again, this not getting such an insane kind of euphoric rally. We saw it with Apple, right? That's why we were looking at Apple last Wednesday when you had this massive move up, it's pushing the tariffs back 90 days. And again, those still loom over us. So you can expect volatility, into June, potentially July, which is when that time is up. But anytime in there, they could figure out some kind of deal. Trump only needs to be viewed like he won on something, right? And that can create problems if you're trying to make these shorter term plans, right? If you're trading options or anything like that. If we look at Apple, right, this massive run up on Wednesday, and it didn't make any sense, right? Because the tariffs that existed on China were going to affect Apple in the biggest way. And of course, we had a major pullback. Now, of course, some things have gotten a lot better for Apple. Apparently, Trump is in the talks with Tim Cook over, quote, something big. Who knows what the heck this is? But, you know, looking and seeing not a lot of misplaced optimism is kind of interesting to me right now. Stay right there, folks. We'll be right back for a short segment.
Many trading newsletters attempt to focus on a narrow set of equities or commodities. While this works for some, it oftentimes misses many opportunities that possess huge gain potential. But how is an independent trader supposed to scan the entire market looking for these hidden opportunities? One simple answer: the opening call newsletter. Basil Chapman, developer of the Chapman Wave trading methodology, has been trading the markets for longer than most trading influencers have been alive. And over that time, he has honed his methodology in order to accurately call movements in a wide range of equities, from semiconductors to uranium to key indices and so much more. Basil is old school, taking the time to educate the trader while also giving his insights into key indices, selective stocks, and more. Opening call subscribers also receive access to dozens of educational live streams that can be accessed at any time for your edification. All first-time subscribers receive a 30-day money-back guarantee. So ignore the pop trading influencers and start learning time-tested technical analysis.
In the world of trading, only a few names stand out like Larry Pesavento, a pro's pro with over 50 years of experience. Larry has seen it all. A former Chicago Mercantile Exchange member, Larry has authored 10 books and trained over 1,000 traders with his unmatched expertise. Introducing Fibonacci 24/7, Larry Pesavento's daily trading service that turns the complexity of markets into opportunities. Published every Sunday, receive a comprehensive report packed with detailed commentary, charts, and videos that illuminate the patterns shaping the markets, with updates throughout the week exclusively for subscribers. Whether through charts or videos, Larry's analysis is your roadmap to navigating the markets. You can sign up now at TFNN.com for just $97. And with all TFNN newsletters backed by a 30-day money-back guarantee, you have nothing to risk. For all the details, visit TFNN.com. You'll find Fibonacci 24/7 right under the newsletters tab.
The reality is that navigating financial markets can be risky. Markets can be chaotic and difficult to understand. Having the latest market advice can help you turn this chaos into a key for creating winning trades. At TFNN, we understand that it can be hard to find reliable market news. That's why each of our market experts offers their very own market newsletter. A must-have tool for every trader out there striving to find an edge in today's markets. TFNN newsletters cover every aspect of the markets so you can analyze the market before you trade. Try any of our great newsletters risk-free with our 30-day money-back guarantee. Just visit the newsletters tab on the front page of TFNN.com. TFNN. Educating investors.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV.
Welcome back, everybody. We got a short segment left here. We have the SPY trading up 1.12%. It's coming down a little bit at the end of the day here. Let's take a look what we got going on. It's a little bit of movement to the downside. I get the composite trading up 0.89%. The Dow Jones Industrial trading up 0.95%. And the Russell's trading up 1.49%. Everything kind of seems like it's moving a little bit lower right now. And you get that dollar still relatively low at $99.65. Yeah, crude oil ticking up, $61.66. One of the things I want to talk about as well, of course, is Teddy Keksat's Forex report, Tiger Forex report. He has some pretty good insights on the currency pairings. And then commodities like oil as well. Taking a look at the gold contract, trading off 0.51% at 3,228. Central banks and some new reports have been buying a ton of this over the past couple of years, and even more so recently. Silver up 1.10%. It seems like you are getting some movement back down again in the yields for the 10-year, but still trading pretty strong, right around that 4.4 area, trading at 4.37 right now. Lucid up 2%. Meta down, Tesla, just honestly oscillating a ton today. Let's, of course, look at the Chinese darling of Weeble. This pulls up. Oh, man, do I not have it on the... This thing is up for... Oh, there we go. This is like reminding me of like Newsmax, Or these massive like spun IPOs, 408% to the upside today. I mean, I wouldn't be surprised if you see it get pushed even higher. Your market cap, 655 million right now. That is just really quite amazing. Same with some of the other Chinese companies. Giving Baba had an amazing movement to the upside today. At least earlier, you're up 6.11%. Wow, look at that, 113. I mean, this is just pretty nuts. Folks, thank you so much for joining me. We'll see you tomorrow morning with Tommy O'Brien for the Morning Market Kickoff. Take care.
Building wealth trading